if I'm asking AI, right, to do something, exactly what do I want it to do? Because if you just ask, hey, which stock should I invest in? It will give you garbage output. Hey, can you create a trading strategy for me? Garbage output. Correct? So you need to tell exactly what you want to do. And to be able to tell exactly what you want to do, right, you need to at least know on a very high level what goes about, what is the process like, what exactly you want the AI to do and what not to do. Correct? And that is wherein I want to first take you a step back. Okay. A quick check, my audio, video, and screen is absolutely fine. A few people were saying that the audio is a little low. Is it fine? So, anybody who's facing any challenges with the audio, then maybe please try and re-log in. Okay. Because everybody else is saying that the audio is absolutely perfect. Now, coming back, as I was saying, I want you to take a step back, right? And before we focus on AI, I want you to focus on what a growth portfolio means. I said I'll be helping you create a five-star growth portfolio, which you can do from time to time. Correct? But what is a step that a professional, let's say without AI, would be taking? And that is wherein I want to teach you at a very high level what the growth investing life cycle is, right? It's a very step-by-step approach wherein I have, with my years of experience across private equity, asset management, I have seen that a few steps are common and are non-negotiable. And that is the exact four-step process that I want to discuss with you. The four-step professional investing life cycle, right? And I'll take you step by step and I'll show you where exactly are we implementing AI. But first, at each and every step, our job is to understand why are we doing that step? Why is it important? And why is it important in that particular order? Can I have a CC in the chat if you're absolutely clear? Thank you. Thank you. Because we don't want to just copy paste and use stuff, right? We want to understand why we are doing something. So, taking you to the first step, the first most important thing is industry identification, right? Before you do anything else, before you start picking stocks, thinking about stocks, you think about industries. That is the first step. Now, let me give you an example. Let's say all of you are wealth managers, right? And you have 1 lakh rupees that a client comes to you with and asks you to invest. Now, let's say you have a hypothetical binding situation wherein you have only two options to invest that client's money. Option A is the AI industry. Option B is the print and newspaper industry. Which option are all of you going to take? AI, AI, AI. So it's safe to say that all of you are saying AI, right? Now, why is it that all of you, I see a few B's and a few boths, but logically speaking, 99% of you are saying AI, right? Logically speaking, why AI? What was your thought process because you said AI? Why did you say AI? Booming, upcoming, right? Lack of demand in paper industry? Exactly right. Correct? We all know that AI is evolving so fast. More and more people are using AI by the day. The models are becoming more and more sophisticated. We are able to do much more with AI. It is, replacing a lot of tasks. And the entire industry is in an uptrend. The usage is also in an uptrend. So there is supply, there is demand, and there is proper growth, right? It's a technological revolution. On the other hand, you have printed newspaper, right? I, for instance, at my house, I used to have around 5 or 6 newspapers 10 years back, right? Today it is zero. Even my elderly parents, they read the news on their phone or they watch the news on their phone, right? And I'm pretty sure so is the case with majority of you. I'll be surprised to see if more than 10% of you have newspapers, correct? Because everything is on your phone, right? So is there a demand for printed newspapers? Might be, but is the demand will be a fraction of what it used to be, and it is going down every day. Correct? So the industry is declining. Would you take a risk to put your money in that industry? No, because you are fighting against the tide. That is not something you would want to do. Correct? And hence, did you see how logical it was? Yes. Now, use that same logic. Always want to invest in industries which have strong growth potential, right? So that the probabilities, or as we call it, the tide is in your favor, right? You're riding the curve. You're not taking unnecessary risks. You're just riding the train, which is, you know, for sure going to reach a particular destination. Exactly. Understood? That is what the importance of identifying industries is. Now, on the flip side, can you realistically scan thousands of global trends like an economist sitting at Goldman Sachs to identify growth opportunities in sectors manually? Not possible, right? There are teams of, you know, PhDs in economics who are doing this on a daily basis at Goldman Sachs, at JP Morgan, round the clock, reading each and every data point across the globe to try and decipher insights. Neither are all of you PhDs in economics, nor do you have the time to look at whatever is happening around the globe on a daily basis. And that this is wherein AI comes in. We understood the problem at hand, what we want to do, but there is a disconnection between knowledge and time. And that is wherein you can use AI. So, do you understand what the first step is? We're trying to identify industries which have strong growth potential as the first step of the process. So, this is exactly what we are going to do. There are some 32, 33 broad level industries out there, right? We are going to use Perplexity to do a proper deep dive, thorough analysis of all the research reports out there, of all the macroeconomic data points, and help us understand the top five, right, which have the highest growth potential out of the 32, 33 sectors, right? Why do I use Perplexity? Because when it comes to research, Perplexity is hands down the best. I'm telling you, you will get a proper PhD grade research report done for you with proper citations and data sources, right? So, can I have an excited in the chat if we are excited to see how we can use Perplexity to do the very same thing? Excited? All right. So, of course, we come to Perplexity and we want to do an AI based analysis, right? So, we will be using a prompt, correct? So, this is SpringPad's growth sector deep research prompt, right? You copy from here the entire 28 pages, you copy, you go to Perplexity, paste it, and hit enter. Okay. Yes, it is 28 pages because there's a lot of parameters that we need to understand how it goes into play and everything. So I will not run it again. I just ran it before the session for all of you. Okay. So this is what my output was, and let me make it bigger for all of you. Do you see India's top five growth sectors for the next 5 years? It builds a proper dashboard for you, right? 2nd August. Now, do you see data points over here? What are these data points? These are macroeconomic data points which actually drive the entire economic and the financial engine. It decides what is going to happen, right? We are looking at companies, but the bigger game is always at a economic level, correct? Now, so it goes through all the data points, does a trend analysis for you, and then it tries to make sense of what each and every data point is actually meaning, right? So the credit cycle is accelerating, and this actually positively impacts PSU banks and private banks, so banking in general. Government capex is increasing quite a lot. So this impacts positively the capital goods and infra space as well as the defense space. Rate cycle and inflation is stable. This actually flows into private banks, gives it better visibility into their net interest margin and their cash flows. There is a lot of PLI in exports, so this flows into defense. There's a lot of shift happening in renewable energy. This positive, and it's accelerating. This flows into renewable energy space, and the GDP is declining, fiscal consolidation. This again will positively flow into PSU banks and capital goods. How? If you want, you can go through these proper RBI, Union Budget, RBI, MPC articles to actually understand. This is not hallucination. This is not some random data. As I said, thus I have a 28-page prompt, right? There's a lot of things that you need to set guardrails on. And it properly gives you sources and analytics of each and every macroeconomic data point, right? Now you'll be saying, Rahul sir, what do I do with these data points? First and foremost, if you're somebody who tracks the market, you can use this macro scorecard, right? All the citations are over here where the resources, you will see what are the most important macroeconomic indicators and how does it tie to the financial markets. You will be able to understand what the trend is, what the year on year changes, and what is the market sentiment around this economic factor. Now, if you're somebody who is new, correct, this can be a little overwhelming, so you can skip it. You can straight away go to this, the most important part of the analysis, which is to identify 5 industries which have the highest growth potential as per the macroeconomic data. Can you see the names of 5 industries? Yes. Of course, this is exactly what we were looking for. PSU banks, capital goods and infrastructure, Indian defense, private banks, and renewable energy. Correct? So we have got our 5. Now you can, of course, move on from here. Answer mil gaya, right? I have got the names of 5 industries. But if you want to learn a little more that exactly how and why, right? Why are the current macroeconomic conditions favoring these 5 industries the most? Correct? You can see what is a macro thesis, who are the key players, what are the 1 year, 3 year, 5 year catalysts in this domain, what are the key risks, what is the export import angle, and you can do this for each and every industry. Cool. Just click on a card and it will give you more details. Not just that, it tells you what is the market size projection for these industries, what is the percentage returns in terms of growth per year, 1 year, 3 year, 5 year. And if you're somebody who tracks momentum versus valuation, you can get a clear snapshot like this. This is the 1 year index return, which is basically the momentum, and this is the valuation angle, which is the sector PE trading. Okay. For those of you who track markets a little bit, isn't it wonderful? Yes, absolutely. Not just that, you get a sector rotation intelligence as well, right? If you know that money keeps on flowing from one sector to the other sector from time to time. So over here, you'll be getting a proper sector rotation intelligence roadmap, wherein even if you don't know how to make sense of this data point, it will tell you exactly what it means. Okay. And policies, very, very important. Policies can make or break an industry. For all of you know the online gaming industry, what happened? Dream 11, policy change overnight, business model goes bust, right? So all industries at the end of the day are at the behest of policies. A policy can make an industry, a policy can break an industry. So this is a policy heat map: FDI regime, subsidy schemes, tax incentive, regulatory clarity, legislative pipeline, and a policy-wise scope. Okay? So you understand, green matlab good, yellow matlab okay, and red matlab something is concerning. So thankfully, no reds, majority are green, a few yellows. And what is the yellow? Okay, it will explain over here as well. And if you want a broader snapshot of the 1 year, 3 year, and 5 year summary, right? Why it is a good pick at the moment. You can find it here. And of course, what are the key risks? Okay? You find the best of things, you'll still find risk. You can't mitigate risk, you can only prepare for it. And the lesser probability of risk, the better. Okay? Isn't it wonderful that you just use one prompt and it creates such a beautiful interactive dashboard like this for you? Right? Absolutely wonderful. Well, I'll be sharing all the prompts and screeners and resources for today, as I said, at the end of the workshop and for the first 3 days as well. I want you to focus and pay attention on the learning right now. Right. So, have we been able to solve our first problem with the help of AI? Identifying 5 sectors? Yes? Perfect. Perplexity, believe me, is hands down the best when it comes to research. Each and every data point has references and sources. And see, each and every reference is either, RBI, Government of India, or the exchanges, or very, very credible sources. Okay. Now, so that was the first step of the AI powered investing or the professional investing life cycle. Can I have a one in the chat? If everybody is absolutely clear with step one, one, chalo, we are 25% of the way there. What is the next step? It is to go deeper into the industries and shortlist stocks. For example, all of you in the first instance, when I asked you, you said that, Rahul sir, AI industry, we will all choose not the printed newspaper industry. Correct? But tell me one thing. Does it mean that each and every AI industry, AI stock is performing well? There have already been billion-dollar AI companies which have gone bust. So just because one sector is doing very, very well does not necessarily mean that each and every company involved in AI will be a good company. I hope all of you understand that. Agree? So the next step is, yes, we have identified 5 industries. The next step for us is to go deeper into those 5 and find the very, very good companies. Okay? Makes sense? Now, can you realistically, excuse me, sorry, can you analyze multiple industries and hundreds of stocks in each and every industry to identify the strong ones? No, right? There are hundreds of stocks in every industry, and you have 5 industries. Very, very difficult, right? So, that is exactly the next problem statement that we want to solve. We have identified 5 industries, right? For each and every 5, we now want to go deeper and find the shortlist of the top 3 stocks. Does it make sense? Got it? Sector 1, we'll find 3 stocks. Sector 2, 3. Sector 3, again 3. So total, we'll be shortlisting 15 candidates. Okay? How do we do that? So for this, I have created something called as a custom GPT, which all of you are aware of by now. Pratik sir also gave you 2 custom GPTs. This is SpringPad's Industry Analyzer. Okay? Whenever you want to use it, just type in the name of any industry and it will give you a short list of top 3 stocks in that industry. Got it? So now let us take it forward from here. What are the 5 industries that we have? We have PSU banks. Yes. So I'll put PSU banks. I'll put capital goods and infra. Okay. So you can do more than one at once as well. You can do multiple industries at once. It will give you top 3 for each industry. Okay. Then we have private banks. Just a second. And last but not the least, we will be having renewable energy. So put in all the names, right? And you hit enter. That's it. Correct? I will show you exactly the output that we have got. So, same stocks, right? It runs for almost close to 6 minutes and then it gives you this output. Let me make it bigger for you. On your screen, can just let me zoom in a minute. Can you see the scores in black? So defense 71, capital goods 70, PSU banks 69. Yes, it messed up with the color coding a bit, right? 67, 74. So what it does is it goes through each and every industry. Okay. Over here, can you see capital goods, defense, PSU banks? Yes. Renewable energy, private banks. So it goes through each and every industry. I have trained it to create a scoring metric for each and every industry, right? So on a few things like a setup, growth, momentum, sentiment, valuation versus risk, and the quality of data. Now, what this does is for each of these five industries, it will go into each, pick the top 20 stocks by market cap, score each and every stock based on these parameters, right? And based on that scoring, it will decide the top three. So over here, for let's say defense, right? It goes through all of the top 20 stocks by market caps, scores them based on these criteria, right? And then based on that scoring, it finds the top three as Bharat Electronics, Hindustan Aeronautics, and Mazagon Dock Shipbuilders. Absolutely, guys, I'll again repeat all the prompts, custom GPT, screeners, everything that I'm showing you, I will be showing you today. I'll be sharing it all by the end of the session. Whatever we have shared across day 1, day 2, day 3, I'll be sharing all of that as well in case you have missed it. Okay. So it basically scores and then ranks and gives you the top three. Over here, you can see exactly how it has scored, whether it has, there are a sort of penalization or a bonus criteria in terms of scoring as well. What is a bull case? What is a bear case? What is the invalidation criteria? Everything, right? And exactly it gives you a scoring snapshot if you want over here for each of the three stocks in every industry. Now, let's not go into complication, right? If you want to keep it simple, can you just click on this icon and see what are the three names, the top three? That is something everybody can do if you're new also. If you're somewhat experienced, the entire document, right? You'll find a little more value. Click on capital goods. Top three L&T, ABB, Siemens. PSU Bank, SBI, Union Bank, Indian Bank. Renewable energy, Tata Power, Vari Energies, Adani Green. And private banks, we have ICICI, Axis, and HDFC. So tell me something, using this one custom GPT, wherein we just type in the name, we are getting an output like this. Are we able to solve our problem? Small caps will come later, second half of today's session. I'm teaching you investing using AI in general. Yes. So for PSU Bank, we have found three. For defense, we have found three. For capital goods infrastructure, we have found three. For private banks, we have found three. For renewables, we have found three. So is our job done? Yes. Defense, capital goods, PSU, renewable, private bank. Absolutely correct. So we have our 15 stock shortlist? Absolutely yes. So that was step 2 of the industry analysis and stock shortlist using AI. Correct. Can I have a 2 in the chat? Perfect. Thank you. Thank you. Great. Is our job done? Arey, defense, I have already got 3. Let me go ahead. Ho gaya kaam. No. As I said, this is a short list, right? We want to do we let's say if you're when you're buying a phone and you're comparing between a few phones, do you buy the good phone, each and every good phone? No. You will create a short list of good phones, then you will try to find the best one for yourself, right? So hence the next step is to compare companies. Now this is where majority of the people fail without even realizing, right? Now, if I ask you how accurately can you compare multiple stocks and identify the perfect stock, a lot of you will say, I can do that. Because at the back of your mind, you're thinking, Are, I'll see open the charts in trading view. See what is the momentum like. I'll open up screener. I'll see the valuation, map it against the industry standard. This is exactly what you'll be doing at best. Problem is, it is not exhaustive. For example, if I ask you, if I ask you today that, hey, I am a teacher at a school. I want to identify who is the best student in a classroom, right? Will you tell me, okay, teacher, go and take a maths exam? Or okay, teacher, go and take a English exam? Or take a physics exam? No, right? Because that beats the purpose. I'm not trying to find the best math student or the best physics student or the best English student. I want to find the overall best student. And to find the overall best student, I need to compare or, take exams across all subjects, right? So that I'm doing an exhaustive end-to-end overview. Is it not? Right? So similarly, when we are comparing companies, why should we only look at the chart, right? Why should we only look at how the P is compared to other industry players, right? There's a lot that we miss. And again, when we are looking at all of this, right, we are taking subjective decisions. It is subjectivity is important, but you need to minimize it as much as possible. You want to try and keep your comparisons as objective as possible, as unbiased as possible. And that is wherein majority of the people falter, right? I can give you hundreds of examples. I can do a live test right now, right? But I hope all of you understood the point. We think we are doing enough, and that is what fuels our confirmation bias. Correct? You think something is right, you will end up looking at only those metrics which tries to make you think that yes, you are right. You will discard everything else. You will not even look at anything else. So that is wherein we want to properly, objectively, exhaustively compare these companies and try to find the best ones in each and every industry. For example, in sector one, let's say defense, we had 3 stocks in our shortlist. Our job is to compare between these 3 and find the best one. Same for capital goods, 3 stocks, find the best one. So this way, from our 15 stock shortlist, will come down to a 5 stock shortlist, 1 stock for each industry / sector. Absolutely correct. Got it? Everybody clear with the agenda? How to compare and why we are doing it? What exactly is it that we want? Okay. Now, how do we end up doing this? Right? Talking about and this is wherein, as I said, a majority of the people go wrong. What we used to do in private equity is whenever a client would be looking at potential candidates, let's say, I'll give you a real example. Um, there was a client who wanted to get into the dental clinic space, and they gave us a list of 30 odd companies that they're looking, or clinic chains that they're looking at, right? And so we get basically NDA done. Everything is masked, right, from the client side, so that we remain objective. So the names of the chains and everything are redacted. We only get the financials and the business data. And then we need to, it will be like company A, company B, company C, like that. And we then used to analyze company A without knowing which company it is at all, right? And we used to, and it was so wonderful that there was no bias whatsoever. For us, company A is just the data that we have, company B is just the data that we have. And we used to do our analysis based on that. And we used to do multiple different sorts of analysis, just like how I would take multiple different subjects for a school exam, multiple different analysis from a financial standpoint. We will score each and every analysis, right? And then we come to an overall score. Makes sense? Sort of like a school as well, right? Different subjects, score each subject, then do a total of the total marks across all subjects, right? This is exactly what we call as a scoring matrix analysis in the financial sphere. This is exactly what I used to do in private equity. This is exactly what I used to do sometimes in asset management as well. Okay. Very, very objective, no subjectivity whatsoever. Have any of you ever heard of this scoring matrix? You will not see it in textbooks because this is a very, very practical concept that I learned while I was employed in the professional workforce, right? So let me and teach you how to do a scoring matrix analysis without being a practicing professional. All of these things you won't find on YouTube and everything, right? I can guarantee that to you. So here is our prompt. This is SpringPad's company comparison deep research prompt, right? We will be using it on Claude because there is a lot of data crunching that we need to do. So you want copy the prompt, the entire 12 pages. I've exactly taught it what the scoring matrix is, what are the different parameters, how to score, what are the rules and everything. And over here, can you see in red, it asks me to enter the name of the three companies. Okay. So I've copied the entire thing. I go to Claude, I paste it. Just a second. Pasted it, right? And now what do I need to do? I need to enter the names of the three stocks that I want to compare. By the way, a word of caution, you can use it to compare any three stocks, but please always make sure that you are using the same industry. So always compare stocks from the same industry. Okay. Why Claude? When it comes to data analysis, data modeling, data crunching, I have not found a better tool at the moment than Claude. I either use Claude all the time, or if I want to do some research work, I use Perplexity. And if I want to build custom GPTs, only then I use ChatGPT. Okay? These are the only three AI tools which I use exhaustively on a daily basis. I use N10, agentic workflows, and all of that, but that is a separate thing. Okay? Now, so for example, let's go back. Let us do this with the example of the first. Okay, defense. Okay. So defense, we had three stocks: Bharat Electronics, Hindustan Aeronautics, and Mazagon Dock Shipbuilders. Okay. Let's add the name of the three stocks over here. What is the second one, guys? Quickly. Let's see if everybody is paying attention. Third one, absolutely correct. So enter the name of the three stocks, copy paste the prompt, and that's it. You hit enter. Now this takes near about 10 minutes because it's a very, very long analysis that it does. Let me show. I had already run it for you. See, exactly those three names, does the entire analysis, builds a dashboard like this. And on your screen, let me zoom in a bit. Can you see investment comparison between these three stocks, 2nd of August, right? Prices are as of 31st July close. Can you tell me quickly, rapid fire, which stock scores the highest, or which stock, as per this, is the best? Hal. So answer you have already got very, very quickly. Why? Because no subjectivity, right? You can see all of you saw 23 out of 30, 25 out of 30, 17 out of 30. Scoring. Objective metric. So again, so HAL scores the highest. So what exactly it does is there are 6 different angles across which I wanted to analyze. Or think of it like subjects. Each and every subject has a maximum score of 5, right? And based on each and every stock, it scores for each and every subject. So for fundamentals, see 4 on 5, 4 on 5, 3 on 5, 4 on 5, 5 on 5, 5 on 5. Okay. Over here, you'll be able to see, is it the best in terms of price performance? Hal? No. Bell is better in terms of price. Bell is better in terms of financial analysis. Bell is better in terms of fundamentals. Bell is better in terms of forward outlook. But from a technical perspective, Bell is absolutely not good at the moment. From a valuation perspective, not good. Hence, it loses out. It is not the best in 4, but it does decent. And in 2, it scores an absolute 5 on 5. And that is exactly what I wanted to teach you all. A few people will just look at a chart. Are badhiya chart, this is good. We are missing a lot of other stuffs which we need to factor in as well. Right? We cannot be tunnel visioned or one directional. We need to have multi-modality in our approach. We need to look at it from different angles. Got it? Does that make sense? Yes. So that is how we come about with the scoring. Now, for those of you who like to understand the why, for each and every subject, all 6 subjects that you see over here, you will find a detailed report. Fundamentals. So you'll find a detailed report. What is the core business and the moat? What are the recent developments? What is the market sentiment across analysts for all of these stocks? If you don't want to read, can you just see positive, cautious, mixed? This much so you can understand. Yes. Green, good. Yellow, okay. Mixed, red, bad. Financials, right? What are the most important financial metrics? You have revenue, EBITDA, operating profit, operating margin, net profit margin, income from others as a percentage of profit before tax. All of it is pulled out, compared. Returns are compared, ROE, ROA, ROC. Leverage and working capital is compared across all 3. And of course, the growth prospect is also compared. That is how it scores on financials. Now you will be saying, Rahul sir, but this is annual data. What if the latest annual report has not yet released? Well, it does a quarterly analysis as well. Revenue, EBITDA, and PAT. So sales, operations, and net profit. Does a quarterly analysis for all 3 stocks. And then at the end, if you want to understand a little more, you can just go through the financial analysis summary. Isn't it wonderful? Not a single number you need to pull for yourself. It does everything. Performance. How has it performed as an investment, right? 1-year return, 5-year return, market cap, 52-week high, 52-week low, dividend yield, basic details, pulls out. But the most important thing, it tells you what does it mean, whether it is doing well, what is the growth outlook like, has it performed as per expectation, all of it. 4th subject, outlook, correct? How is the stock expected to perform? All of that over here, it analyzes and details down for you. Macro setup, regulatory backdrop. If you like to read, this is a gold mine. Otherwise, answer to you have got in terms of your scores. You can just go here, Outlook. Okay, what is the score in Outlook? You can find over here. But if you really want to understand, this is a gold mine. Same. How many of you do technical analysis? a little bit. It does technical analysis for you as well. You don't need to open up a chart anymore. RSI, what does the RSI actually mean at the moment? MACD, the meaning, what is it conveying? 50-day SMA, 200-day SMA, volume, momentum, and a description of the current technical analysis snapshot. Does for all three. In case you don't know what technicals is, at least again, red, bad, green, good, yellow, okay. Okay? There's something for everybody. Clear? You can find the entire summary over here as well. And last but not the least, valuation, right? PE, forward, price to book, EV EBITDA, PEG, order book, dividend yield, every metric that is in the valuation sphere, it plots, it compares, and then it gives you a summary, right? And based on this, you can see that HAL from a valuation perspective is better than the other two. And if you want, you can go and read the valuation write-up as well. And of course, that leads you to the verdict. 25 out of 30 scores the highest across everything. You find a small write-up on why HAL, right? And why do Bell and Mazagon Dock miss out? So don't just focus on this. More important than everything else is understanding what is happening. This will help you shorten your curve to a fraction, your learning curve, right? So again, very, very quickly, have we been able to do this? From the short list of 3, have you been able to arrive at the best pick? We did this for one sector, right? Can you do it for the other 4 as well? Can you do the same process for capital goods, PSU, renewable, private banks? So you'll be getting a short list of 5, one from each industry, just exactly how I showed you for a defense. So can I have a 3 in the chat if we have done company comparison with the help of AI? Yes? Perfect, perfect, perfect. Now, is our job done? We identified HAL, for example. Our job is done. We identified the best pick here. What else to do? Absolutely correct. Entry. Is it right? So that leads us to the 4th step, right? Which is stock research and valuation. What do I mean by stock research and valuation? There is a saying when it comes to the markets, buying a good stock is important. Buying a good stock at a good price is the most important thing, right? So hence we need to look whether the current price, whether it makes sense at the moment, right? Or do you need to wait? Do you have enough runway for it to generate returns, grow for you? Correct? All of these things you need to figure out. Now, can you confidently do that? Can you confidently tell if you're investing at the right price? Like, let's say, an equity research analyst at JP Morgan. All of them, they build very used to take at least a week or so. Now, and by the way, all of you remember that on day 3, we were talking about how day 1, using the perplexity prompt, I told you how you can pick the brains of all these analysts and create the probability distribution. And I told you, right, the analysts have recommendations and targets. For example, this is Anand Rathi's recommendation. This was released on the 30th of July for Vari Energies, right? The current price was 2624, and they expect Vari Energies in the next 12 months to go to 3333. That means a 27% upside they are expecting in the next 12 months. Or let's say something like this, ICICI Securities research, again 30th of July, it was released on Acme Solar, right? They expect a 25% up move in the next 12 months. Now the catch is,
55,
right? The catch is
64,
all of this is done after going through
60,
all of these number crunching and data.
65,
El- Believe me, does it look
60,
complicated? The entire report that I'm showing you
60,
does not make sense, right? Data, data, data,
50,
a lot of jargons. Same thing for Anand Rathi as well.
50,
See this?
60,
Jargon, 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 and a lot of
50,
financials. But this is important.
60,
This is actually the work that analysts
55,
do to try and come to a conclusion like
50,
this or like this,
65,
right?
60,
And that is
60,
exactly what we want to do. Can we also
50,
come to price conclusions like this?
50,
How would it be if you can create a
65,
report like this for yourself? Create
55,
your very own research report.
65,
It would be awesome, right? Mind blowing. Fanciest of stuff.
65,
All right. Well, we will
60,
be doing exactly that. I will show you how you can use
65,
Claude to build such a research report for
40,
yourself, right? Do it for all 5 stocks. I'll be showing you the one with HAL.
50,
Do it for all 5,
65,
and then you'll understand whether it is good to go. All 5 are good to go at the moment or not, right? So this is the prompt that I have, SpringPath's comprehensive stock analysis prompt. You copy, as the name suggests, every bit of it. Okay. Every bit, all 14 pages of it. Go to Claude, paste it, and write the name of the stock that you want to analyze and value. So, which one do we want to do? We want to do HAL,
55, 50,
correct?
55,
So, you hit enter again. This is a
50,
lengthy analysis. It will take 10 minutes.
60,
Let me show you how it works. So, same copy pasted prompt, Hindustan
50,
Aeronautics created the report for me.
50,
Let me make it bigger. On your screen, okay, do you
45,
see a research report,
40,
right? FY26
50,
March and F31st March
and
results are out by Rahul Chandra.
45,
Do you see a recommendation like this,
3378,
over here?
3378,
Yes. Current price near about 4,650. Target price
এবার এটা থেকে বাদ যাবে তো নাকি?
5,350. Upside is 15%. Horizon is around 18 to 24 months. Now tell me something.
3378 তাহলে বস্তাটা বাদ দাও,
Is
ওগুলো
this
বাদ দাও।
amazing? Cool. Very, very cool. But again, I'll repeat to all of
3378
you,
থেকে কত বাদ
the
যাবে
answer
সেটা বল।
is not the most important thing. The processes. If you have never, let's say you don't know anything about HAL, if you just go through this brief,
3378 থেকে
very, very brief couple of paragraphs, right? You will understand more about HAL than
44 কেজি
99% other people.
700, এটা
And it
আবার
is
কি করে বাদ
all
দেবে?
in very
বলো
same,
44 কেজি রাব বাদ দিতে।
very simple, understandable English, right? Not
রাব
overcomplicated
বাদ দিয়ে দিত।
jargons. Now, how does it come to here? As I said, this is the most important thing.
45 কেজি দেখেছো?
Even analyst
বলো
recommendations
44
can
কেজি।
differ, right? So, of course, this is not set in stone. That is why the process is very important.
অর্থাৎ
Like a proper
3333, এটা
analyst will
ভাজিত
go through
60।
each and every parameter, market valuation and price. You see, it pulls all of the data. In case
55
you
বস্তা
don't know
33
financial
কেজি নাকি?
analysis, it does it for you. Explains in
কত করে
simple
বলছে ওরা?
English. This is the trend, and this is the key one-liner you should make of it
আমি
in
ওটা
a
বলছি
simple
বস্তা
layman's
কত
term.
করে?
Profitability does calculations across 5 years. It pulls the data, calculates the metrics, does it for all 5 years, and then it tells you also what is happening. You don't even have to look and see, okay, it is good or bad, right? Does a trend analysis, does a quality of earnings, everything, and explains in simplicity. It found a red flag, it told you what the red flag is. Growth, balance sheet, cash flow, dividend analysis, efficiency ratios,
700,
valuation metrics versus industry peers, everything it calculates and does it for you. Can I have an MB in the chat?
৭৭,৭৭০
You don't
টাকা।
have to pull data. You don't have to
৫৫ বস্তা
you
৩৩ কেজি
don't have
বলছি।
to do it for year after year. You don't have to do anything. It does all of it. It tells what is happening. It explains in
আমার
simple
হিসেবে
English
টাকা
as
হচ্ছে
well.
৭৭,৭৭০
Not
টাকা।
just quantitative metrics. As I said, number crunching is not the only most important thing.
ওটাও
We
লিখে নাও পাশে,
analysts,
আমারটা কত হচ্ছে।
we are doing this just because we can crunch numbers? No,
এ,
because we can understand what the
হ্যাঁ,
numbers don't say as well. That is where qualitative metrics also come in, right? What is the business model? Is it viable? Where is HAL making money from? Is the potential for
দাঁড়া
growth there?
৫৫ খানা
Does it
৩৩
make
কেজি তো
business
বলে দিলাম।
sense? Are they doing
ঠিক।
technological development? How is the
হ্যাঁ,
management like? Are they in a good position to drive the company forward? Make it grow even better? What is the growth strategy? All of it details for you. If you love reading, please read the entire thing. I'm telling you, you'll be just do this once. You'll be more knowledgeable than anybody else you meet on a particular stock, right? And if all of this is too much, just read the key takeaways. Does a shareholding pattern analysis. All of you know shareholding pattern also tells a lot about what the institutional interest on the stock is saying. Does a promoter holding, institutional handover, retail participation, an entire end-to-end shareholding analysis, a trend analysis, and tells you take off it. Not just that, gives you an investing thesis. And the most mind-blowing thing, we build models for this, right? It does a proper fair value estimate using 3 methods, not one, 3 methods. A multiple based approach, a EV EBITDA based approach, and a sense check across the street estimates
না
across
৫৪
other
বস্তা না
stocks in the same industry, calculates across all
বলো।
3 different fair values, does a weighted average, and then builds a consensus opinion for you and gives a bull case, bear case, and base case for you. Isn't
তো
to
পিন্টু,
do this we
ওই
take
যে
a
তোমার ফোনটা
lot of
৫
time.
মিনিটের জন্য একটু পাওয়া যাবে?
When
ক্যালকুলেটরটা
required,
ইউজ
it
করো।
will do a DCF. When required, it will do a SOTP like it has done over here. It has done a weighted SOTP. Again, I don't want to throw jargons.
খালি
SOTP
৫
is
মিনিটের জন্য
basically
দেবো।
a sum of parts valuation. And it is so sophisticated that it can do that for you, right? And last but not the least, it gives you a conclusion. And as I said, right, answer that you will get in the first step is itself.
তুমি ওখানে
But
আরেকবার
just
বলো না
go
আমাকে
through it and you will
প্রথম থেকে।
see how much
হ্যাঁ, প্রথম
value
থেকে
it
বলো তো।
adds to you, your knowledge, and how clean it makes understanding of these figures for all of you, right? So again, from a very, very valuation perspective, 15.1% across 18 to 24 months given current
বস্তা
market
উঠাতে
scenario.
দিও না তো, বস্তা
It
প্রথম
is
গোনো।
not great, it is not bad, right? But again, this is not written in stone. As I said, the analysis,
বলো
you
তো
can see
প্রথম
the
থেকে।
different cases over here. If the markets pick
হ্যাঁ,
up, the bull case is
না
41%,
৫৮টা তুমি ভালো
right?
করে গুনে নাও,
So
তারপর লোড করতে
again,
দেবে।
but tell me something, how crazy is it that you can create a research report which in
যে
my
কম হয়ে
opinion
যাবে
is
নালে।
much more
একখানা বস্তা
understandable
কম বেশি হচ্ছে, দেখো
and
ভালো
more
করে।
explanatory than these
বা
professional
১.৫
ones,
টাকা কম বেশি হয়ে
and you
যাবে।
can build it yourself in 10 minutes just copy pasting. Amazing, right? So have you been able to do the step 4 for us? Can you do it for the other 4 industries as well? Yes. And now tell me, have I been able to teach you methodically the top down approach, industry, shortlist, compare,
বলো বলো বলো
and then
বলো তো।
value? The entire step
হ্যাঁ,
professionally that we use
হ্যাঁ,
using AI step by step.
হ্যাঁ,
Yes.
হুম,
Diversified, yes.
হ্যাঁ,
Different industries. AI researched,
হ্যাঁ,
yes. Valuation backed, yes.
৬০,
Can all of you now confidently
৬৫,
research and create your 5-stock growth investing portfolio
দাঁড়াও।
as promised, backed by research, data, and process and AI?
৬০-এর পর ৫৫।
Drop in the biggest yes in the chat.
নাম্বার দাও না, ১ ২ করে নাম্বার
Yes,
দাওনি।
yes, yes.
আচ্ছা তারপর
Perfect.
বলো
Perfect.
65
Happy?
60
How many of you were not aware that things like this is
65
possible?
60 60
That's
50
so sweet, right? Well, you learned something
50
really, really powerful today. A lot
60
of you were asking about mutual funds.
50
What about mutual funds and AI?
60
AI can make a very, very big difference
55
when it comes to customizing plans for yourself,
50
right? If I'm wearing this shirt today, this shirt
65
will only fit somebody who has the same
60
structure or physique as me,
60
correct? Is it going to fit each and everybody?
50
No, right? So why do we
50
think that a mutual fund plan or a
65
portfolio is the same, is going to fit each
55
and every person? That is the most
65
common mistake people do when it comes to investing,
55
right? It should be personalized. That is where advisors come in. And that is where, when there is advisory, there is to a certain extent, you can use AI to personalize your mutual fund journey, your plan, do goal-based investing with the help of AI, right? AI can be very, very powerful to help you get out of that, agar ye kar raha hai, I'll also do. This fund gave highest returns, I'll choose that fund. Doesn't work that way. And I'll be teaching you later on in today's session how you can use AI in mutual funds. I'll show you something very interesting. All of you, please remind me that I need to show this to you at the end of the session today. Okay. Now, moving on to the second part of our curriculum for today, which is small caps and multi-baggers. Now, what are small cap stocks?
50
Okay. What are small cap stocks?
55
As the name suggests,
65
yes, we are moving on to the second part of the
60
agenda for today, which is small caps and multi-baggers.
50
And therein, that is why I'm asking you, what are small cap stocks? Small companies. Very, very simple. So in India, small cap stocks are publicly listed companies whose value is less than 5,000 crore as per SEBI.
45 না
Or
65 কত
like
বললে
I was teaching in you on day one, remember I said we ranked the
40
companies. If
65
we
তারপর
rank the companies by
45
how big they are, top
তারপর
50 goes into Nifty 50.
58
Top 100 is usually ballpark large caps. Then I
এবার
taught
এটা
you
থেকে বাদ
in the
কত দিতে
on
হবে
day
সেটা
one
বলো
the mid cap 100, 101st to 250th.
আচ্ছা এটা
These
থেকে
150 companies are usually, this
তার
bracket
মানে
is
এটার থেকে তোমার
mid
আবার
cap
45
companies,
কেজি এই 45
right?
কেজি বাদ দিচ্ছে
And then 250th onwards,
3268
we start the small cap category.
আজি তো
Now, these are general rules of thumb. It is not written in stone. Like 101st company will be a will be a mid cap. It is not that. There's a little bit of an overlap. There's a little bit of a gray area. But this is the usually accepted definition as per SEBI and what we see in practice. Okay, understood? So usually less than 5,000 crore companies or above 250
ওরা কত বলছে
one ranking. Okay, these are small caps. Now there are many, many advantages to small caps. They are small, hence they can grow a lot. I am already grown.
আচ্ছা আমার একটা কথা
Can I
শোনো
grow taller?
তুমি কি কোথাও আমাকে একটা
No.
বেশি বলেছিলে
But a 2-year-old will grow, have a lot of
8টা
potential
বস্তা
to
আমাকে
grow.
একটা 60 কেজি তাহলে বেশি আসছে
Correct?
সেইটাই বলছি
Can become a 6'2", but can also become a 5'2".
ওইটাই মেন
It has
ওদের যোগ
potential to
বিয়োগ
grow,
গুলো খুব সাবধানে
but
করতে
we
হবে
cannot tell beforehand how tall it is going to
আর
become.
বস্তা উঠাতে দাওনি তো প্রথম
Correct?
থেকে
So like there are advantages,
প্রথম থেকে
there are
বস
risks to
হ্যাঁ
small
প্রথম
cap as well. My height, you can say, if I am 5'11",
এইটা ঠিক আছে
I'll be
বস্তা
5'11"
প্রথমে
tomorrow.
ইয়ে করতে দেবে না
But the 2-year-olds, you will not be
এবার
able to
ওরা
tell
কত করে
whether
বলছে
with confidence whether the 2-year-old is going to be 6 feet 18 years or is going to be 5 feet 2. Correct? So yes, there is a lot of potential, but there is uncertainty as well. Does that make sense to all of you? So similarly, small companies, they have a lot of growth potential, but because they are small, they have a lot of risk as well. They're often undiscovered, undervalued. They
কি
can
বলছে গো?
deliver great returns over the course of time. But because they are small, something like a COVID shut a lot of small
ওরা কত
companies.
বলতে বলো না,
But
চুয়ান্ন
did
বস্তা
something
কত
like a
কেজি টোটাল সব
COVID
বাদ দিয়ে?
stop DMart? No, right? Did something like a
চুয়ান্ন
COVID
বস্তা
kill
উনত্রিশ কেজি
Jio
তো সব বাদ দিয়ে?
or Reliance or Axis Bank or SBI? No, right? Because they're so big, they have cushion. They have a safety net. Small companies, they don't have a safety net. Got it? So small caps are volatile. And if you can't handle volatility, if you can't handle risk, then my word of advice will be to stay away. Absolutely stay away, because big returns require big risk appetite. You can't be
কি
risk
বলছে?
averse and chase big returns. Now, the real question is, if you're somebody, right, who has the risk appetite, more importantly, the appetite to learn, right? Would you like to see some of a few historical small cap success stories? Yes. Risk appetite, let's keep it for later, but we have the hunger to learn. Let's see a few stories and see
হ্যালো,
how powerful small caps have been investing over the course of time. Now, of course, let's
হ্যালো,
take a moment to see how 10,000 rupees invested in any of these stocks would have turned into, right? Look at Symphony Limited.
হ্যাঁ
10,000
কত
in
হচ্ছে?
2001 would have become
স্যার
25
টাকাটা
lakh
কত হচ্ছে?
30,000, right? Which is 2,530 times. Eicher Motor would have become 1,461 times. Bajaj Finance would have become more than 1,200 times, right?
ভালো
So
করে
on and
দেখে
so
নাও,
forth for Jyoti
৭৬,০০০ না
Resins,
ও
Avanti
পাঠিয়ে
Feeds,
দেবে
and
ওসব না,
Astral
এখনই
Polytechnic.
যেটা হচ্ছে সেটা বলো,
Now, of course,
পাঠিয়ে
right, it's
পাঠিয়ে না,
not just about picking stocks.
এমনি
For
ধানের
every
দাম
Symphony,
বাড়ছে,
there'll be stocks which have done nothing, right? For
ধানের
every
দাম শুধু
Bajaj
বাড়তে
Finance,
থাকবে,
there'll be stocks which have done nothing. But yes, when
কত
things
হচ্ছে
go
সেটা একটা
right,
স্লিপে
it
লিখে
can
নাও,
go really,
তাহলে
really
ওটা
right.
তখন মিলিয়ে নিতে পারবে, লিখে ওর
I hope
নাম্বারটা
you
নাও, ফোন
understand that
নাম্বারটা।
it is not that every small cap stock is going to have this journey.
হ্যাঁ হ্যাঁ ঠিক
Got it?
আছে,
So, same way,
হ্যাঁ
our goal is to
ফোন
try and
নাম্বারটাও নিয়ে
see
নাও।
what is it that makes these stocks
এই তো এটাই
have
তো ভুল
performed
করো
so
না,
well,
ওই
right?
সাইন
What
ফাইন
worked
সব
in these
একটা
stocks'
ফেসবুকের
favor?
মতো বানিয়ে নিত,
Let's try and
ওরা দেখ
understand from these success
পরে
stories
গিয়ে বলতে
so that
হবে না
we
না
can
দাদা
try
এই না
and
ও
then
হয়েছে
pick
অমুক না
the
তমুক হয়েছে,
next
এইসব
success
ফালতু
stories
কথা বিশ্বাস করলাম, পেপারে
for
ঢুকো
ourselves,
তারপর তো যাও দেখলে যাও।
right? But before we start doing that, would we like to see one successful investor who had a similar sort of story in a stock called Titan? Who is he? Absolutely correct. The
ফোন নাম্বার
famous,
নাম
the
আর
big bull
ইয়েটা
of
লিখে নাও
India,
ওর।
Mr. Rakesh Jhunjhunwala, late Rakesh Jhunjhunwala. Titan is still, till date, his biggest holding. He invested in Titan when Titan was a
ঠিক আছে রাখো।
160 crore company, right? Would you like to see how big Titan is today? Titan today is a 4,32,814 crore company. And when did he invest? When it was a 116 crore company, right? More than 2,500 times it has grown. Now, of course, what is the point about, seeing what went right for Rakesh Jhunjhunwala ji and other people, right? What is the point of all of this? Not to say, Arey, gosh, only if, right, this would have happened with me. No point. But let's learn what went right for them, and let's try to take the same knowledge into our stock picking from today onwards. Does that make sense? Does that make sense? We want to learn from history so that we can create a better future. And that brings me to the next segment of how to identify good small cap stocks, right? Which leads me to the next most important thing that I want to tell you is the golden rules of small cap investing. right? I'll be sharing a few do's and don'ts that always work, and you need to abide by it, understand it, and abide by it. Okay. So, the first rule that I want to share with all of you is you should always focus on finding correct industries and analyzing stocks. Rule number one, identify the right sectors. Now, see, when I was talking about growth stocks, right, what is the first starting point that we had? Industries. Similarly, you should always start focusing from the right sectors. Always, without a question, right? Where do small caps structurally outperform large caps? This is what you need to understand. Not just sectors which are growing, right? Small caps need a little more nuance. You, of course, need to find sectors which are growing, but you need to find sectors where there is an advantage. What do I mean by that? This is where it gets interesting. You need to look for fragmented markets, water, waste. There is no single player dominating the space, right? Small companies win locally. For example, what is the benefit of a fragmented market? There is no definitive king, right? Everybody is fighting, but there is no definitive king, right? Any of these players can go on and become the king in that industry. And what happens to the king? King has money. Yes or no? He's successful. He has made it in life. So exactly that we want to look for. We want to look for where the markets are fragmented, where there are new categories evolving, like EMS, right? Electronic manufacturing services, or like clean energy. A lot of movement on focus on clean energy, right? Or maybe there is a lot of government push, let's say for defense, a lot of government policies, incentives, or let's say where there is a very, very niche expertise like specialty chemicals or CDMO, wherein skill matters more than scale. Now, let me give you a context, right? Uh, Swiggy and Zomato, that is eternal. There were new categories. They created a new space entirely, altogether, right? And of course, they started off as small caps, but look at them. Both of them are large caps today, right? Policy push. All of you have heard of Dixon Technologies? You know, Dixon had a huge turnaround during 2015-16, if memory serves me right. And you know why was that? Because of a government push, right? To create mobile phones, to set up factories, to make in India, all of that, right? So again, this is where you need to focus. Okay? Policy. You need to find where there is an edge, where there is a place to, right? Something like ethanol now. Everybody knows, you know, two very famous children who are minting money. Let's not go there. Let's not go there. Okay? But yes, ethanol now, right? Same goes for renewable energy, right? There is no clear-cut front runner in the renewable energy space, right? And there are a lot of different angles in renewable energy. There is solar, there is mix, there is hydro, this, that, right? Even wastewater and waste management, water management, people don't talk about it because these are boring sectors, right? Money is made in boring businesses, correct? So again, try to look for all of these, right? Before picking any sector, run it through these filters. If any sector passes more than three of these categories, right? Government policy is favorable. There is a global tailwind, like China plus one, right? A lot of people are moving out of China, and India is the only viable option. So there is a global tailwind. if there is a fragmented market, if there is a new market that is emerging, or if there is a small base map. That means, can a company which is making 500 crores in revenue realistically double its revenue? Or let's say, make it 1000 crores, 2000 crores? Yes. If any three of these questions, right, is true, then it meets your criteria for an industry. And as a, something for you to think on and look into, 6 sectors where small caps can win, very, very important sectors at the moment, are EMS, which is electronics manufacturing, right? Defense, specialty chemicals, right? Waste and water management, clean energy, and of course, CDMO and API, which is the pharma space, right? These industries, which are niche, right, meets the criteria. These are good candidates for finding small caps within this. All of you can take a screenshot of this, or irrespective, it will be there in your notes. Okay, got it? Now, for example, the power of finding good industries at the right moment is very, very powerful, right? When green energy was booming, right, 2 lakh invested in KPI Green back then would have turned it to 80 lakhs, 40 times returns in less than 3 years. So timing and understanding where there is opportunity at the right time is very, very important. And hence, I say rule number 1 is identify sectors and make sure that it meets these criterias. Can I have a rule number 1 in the chat, guys? Very, very straightforward. See, I will try to keep my teaching simple. I approach investing from a very, practical and simple and a knowledge-based framework. Correct? I would love for you to do the same thing. It is not rocket science. If it meets your criteria, good. If it does not, bad. Move on. Okay? So that was rule number 1. Now, the second thing that I want to ask you is, what do you think is the job of a company? What do you think? Why are there companies with shares? Why is there a HDFC? Why is there a Mahindra and Mahindra? Why is there a Reliance? Growth, create value to make profit, earn money, grow. I still haven't gotten my answer. Services, create employment. That is noble. But what is the underlying reason? Why would you tomorrow start a business? It is not, the job of the company is not to make profits. No. All of you are saying it is to make profits. No, it is not to make profits. But it is along the same lines. Giving back to community to ekdam hi nahi. People will put it in their brochure. CSR activity. Yeah, if CSR was not mandated, I don't think anybody apart from Tata would do it. Correct? So let's not kid ourselves. Well, the job of the company is to increase profits, not just make profit, but to increase profit. Understood? And I'll tell you exactly why. Okay? Let's look at Bajaj Finance. Okay? Let's look at Bajaj Finance. Okay? Let's look at the last 10 years. Okay? What has happened to the price of Bajaj Finance? Is it fair to say that it has steadily kept on going up? Yes. Fair to say, right? Steadily kept on going up. Now, let's look at this. Bajaj Finance's profits across the last 10 years. 900 crores, 1280 crores, 1800 crores, 2500 crores, 4000 crores, 5000, 4400, which this is because of COVID, 7000, 11,000, 14,000, 16,000, 19,000, 20,000. Has it kept on going up as well? Profits keep on increasing, price will take care of itself. Got it? Profits keep on increasing, price will take care of itself. Let's look at Asian Paints, one of the biggest stories. Is it fair to say that Asian Paints has continuously, on an average, given or been on the uprise? Barring the last 2 years, Asian Paints has always steadily performed, kept on going up, kept on giving profits, right? Just discard the last 2 years because it has started now facing competition for the first time in reality. Otherwise, nobody could compete with Asian Paints, right? And let's look at this. Profit 1400, 1800, 2000, 2100, 2200, 2700, 3200, 3000, 4000, 5000. And then, yes, it started taking a hit over the last 2 years. But till this time, 2024, was it on the uprise? Absolutely yes. See, over here, steady upgrowth. Then profit started falling. And did the price also start falling? Yes. So as long as profits are increasing, what have we understood? Price will take care of itself. Right? Let's look at TCS as well. Right? Famous companies, all of you know them. Steady uptrend. Yes or no? Steady uptrend. Let's look at the profits. 20,000, 24,000, 26, 25, 31, 32, 32, 38, 42, 46. Then there is a slowdown. 46, 48, 49, 50. Barely any growth in profits because of whatever is happening, the entire AI. Whenever profit stops growing, then we see a stagnation or a decrease in share price. Is it clear? I can give you hundreds of such examples. But is it clear? Always look for profit uptrend. That is your rule number 2. Always look for profit uptrend. It increases only value if it creates more value, right? More profit, more value created, hence only stock price will go up. Now think of it very simply. A stock that you purchase, right, is making, let's say, 100 crores profit every year. Hypothetical stock A, right? And you bought it for 100 rupees a share. Next year, if it still makes 100 crore rupees of profit, is somebody going to pay you 101 rupees per share? Is somebody going to buy that stock from you at a higher price? No. You bought at 100 rupees. It is giving the same profits. Why will I buy it at a higher price from you? So always look for profit uptrend. See, I'll be teaching you, I can create financial models. I can create statistical models to teach you the same concept with, thousands of data points. But what is going to be the benefit? It will complicate things for you. I'm teaching you the same thing with understandable visual representations that we can understand, right? I thoroughly believe a good teacher is somebody who not only knows the most complicated concepts, but can teach it like a school student, right? And hence, there is a lot of things that go into it. But if the bottom line, the one-liner is, if there is a profit growth, only then there is a very, very high probability that the stock also keeps on going up. That is only thing that we need to know. Okay? Right? Now, Moving to rule number 3, it is the opposite side of the coin, right? Like I said, that if the profits are growing, stock price will take care of itself. Don't worry about that. But what we have seen happens a lot, and this comes from the private equity, venture capital, angel investing, and thanks to Shark Tank and all of this, right? That people start romanticizing companies which are loss making. And, don't romanticize it. Barely 1 in 100 make it. Now you will say, Arey, but Rahul sir, Zomato was a loss making company. Swiggy was a loss making company. There are now large caps. They will make loss, they will burn money, only then they will grow, right? And once they grow, once they become big, then they will make money. You are absolutely correct. Swiggy did do it. Zomato did do it. Uber did it, right? One of the biggest, they changed how we communicate, correct? But for every Swiggy, Zomato, Uber, right, you will find hundreds of companies with the same promise, the same concept, right? But they never make it. Have you heard about cred? All of you? How does cred make money? Have you ever thought? They're burning millions and millions of dollars. They haven't been able to find a single solution. They have shifted, they have tried hundreds of things. In-app notification, in-app advertisement, gamification, loans, everything they have tried. They have not been able to do that. But cred has been operational for more than 7-8 years now. Selling data of rich person, everything they have tried. Have they been able to monetize it? Have they been able to do justice? Big investors have put their money. There have been so much talk of cred, right? All of you know cred. So again, what did I say? Don't romanticize. Yes, cash burn karke Zomato, Swiggy, Uber, they turned around, right? But don't get married to the idea that loss making big company is good. Clear? And I'll tell you again, why talk about it when you can show it visually? Right? Why talk about it when you can show it visually? Let's look at Eternal only. Okay? Eternal listed, very good listing. Stock went down, and only after 2024, it went above its IPO price. Byju's, very good example, right? But let's go back to Eternal. Launched in September 2021. Only in late May 2024 was it able to go above its IPO price. For a good 3 years, it did nothing. Right? It was below its IPO price. Why is it so? And after that, though, it went up, right? After that, it is history. Let's look at profit. Loss making, IPO year, loss making, okay? IPO. Still made losses. Everybody's like, but still making losses. I'm telling you, this is how it works. People put in money, still making losses. 2023 losses. Where was the share price? 2023 losses. Okay? Starts making a profit. March 2024, reports it. What happens? Starts picking up. Right? So, when we see this, right, when we talk about Zomato, what is one thing that is absolutely clear? Yes, it did do a turnaround, but the stock actually started moving after the profits began, right? Even in Zomato, which majority of you will tell me that cash burn, good example. Zomato also started making profit after investors saw that, yes, this business is now making money. You get my point? Let's look at another big example. Paytm, right? IPO'd December 2021. It has still not been able to reach its IPO price. Correct? Kept on falling, falling, falling. Because what? Losses, more losses, more losses, more losses, 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 losses. Now, March 2023 and March 2024, within this time, recently it started positive, right? The losses kept on shrinking. And since 2024, do we see a change? As losses kept shrinking, right? And it turned profitable, what happened to the stock price? All the way from 340, it is now near about at 1220. Anybody knows why there was a change? Loans business. So there are two concepts when people create businesses, right? And by businesses, I mean like big. The entire country will use it, that sort of business. You either build a product, okay? You either build a product and entire user base adopt that product, or you build a user base first, and then when you have a user base, you start adding some product. So Facebook, for example, I digress a bit, but I hope you understand. Facebook started off as a social media platform, right? They built the user base first. Everybody interacting with one another. Are Facebook friend hai kya? That was the talk 10-15 years back, right? So they made the entire globe their user base by creating a platform. Now imagine once everybody starts using the potential, you create a platform first, whatever you sell, whatever you want to sell, you'll be able to sell. Correct? So now what Paytm happened was, Paytm was doing UPI transactions. Correct? Paytm wallet, all of that. But the margins were so low that the amount of money that Paytm was spending, the revenue was nowhere clear that, right? So even though everybody loved using Paytm, right? It is, I think, still the most used UPI app, either Paytm or PhonePe, but earlier it was definitely only Paytm, correct? Everybody loved using Paytm, very reliable, everything, but it was not making money. But they said, almost half the country is using it, correct? Why not we bring loans wherein there is a lot of margin? We have so many users, 50 crore users, for example. How about we start selling loans? That is exactly what they did. And they had this turnaround, right? Ola, let's look at Ola. So you understand, right? Company does not make money, share price will reflect. Company starts making money, company keeps on growing its money, share price will reflect, right? Let's look at Ola as well. I don't understand this company at all, and even more so the founder. Like, of course, with all due respect, I don't understand what he's trying to do. Anyways, that is not my job. He's, of course, look at Ola, IPO'd, and then downhill. Why? Investors, we don't like losses. Profit and loss, loss making, more losses, more losses, more losses, more losses, even more losses, right? Correct? Even more losses. Losses are keeping on increasing. Do you think investors will be happy? There are 7,000 stocks. I'll go and pick something else, right? And by the way, this is not just smaller companies, right? Look at Vodafone. Absolutely mammoth. was doing absolutely amazing, and then all of a sudden, all the way from more than 100 rupees odd levels, it continuously for the last 12 years, it has been struggling. It has been down almost more than 90%. Why? Profitable, it used to be profitable, losses started, and look at the magnitude of losses. See the impact on the stock price. Okay, it's starting to increase. Now, hence, what do you learn from this? Stop romanticizing loss-making companies. It is your hard-earned money. You don't need to gamble on it. Okay? You don't need to gamble on it. If you find a company is loss-making, move on. Don't risk your money. Let the company risk their investors' capital. Let them make more losses. You don't risk your hard-earned money. Right? So, two things I hope you understand. Always look for profit uptrend and stay away from loss-making companies. Okay? Can I have a 3 in the chat? Clear, everybody? Now, the next thing that I want to teach all of you is the concept of the different types of stocks. Now, I would categorize it as 3 different types. There is an evergreen stock, stocks like DMart and Britannia. Is it so that you go to DMart less during winters and more during summers? Is it so that you have more biscuits during summers and less during winters? No, right? The demand for their products is throughout the year and they are evergreen. Correct? Now let's look at a DMart, which is Avenue Supermarts. Now let's look at DMart. Okay. Let's look at quarter on quarter. Is it more or less the trend is the same each and every quarter? Growing marginally, but very, very close to quarterly figures. Correct? Let's look at Britannia. Same. Let's look at the quarterly results. Very, very similar. Right? It is predictable, consistent, and predictable. And hence, we call these stocks as evergreen stocks, which have equal demand, equal flow throughout the year. Then we have stocks which are seasonal, right? Wherein you will, of course, have more Pepsi products in, let's say, summers than in winters. You will, of course, have more Manyavar sales in the last and, last quarter of the year and the first quarter of the year. Why last quarter? Festivals, right? Wedding season starts. And why first quarter, JFM? Wedding season. So festivals and wedding starts from October, September, October, goes till March. Right? Now let's take a look at this. Sorry, Vedant Fashions. So Vedant Fashion is the name of the legal company, which is the brand name is Manyavar. Now, if you look at quarterly results and look at this, June quarter matlab April, May, June. Similarly, September quarter matlab, which is quarter 2, September quarter matlab July, July, August, September. Quarter 3 is October, November, December. That is a December quarter. And quarter 4 or March quarter is January, February, March. Now, look at the June quarter. 62 crores profit. Okay? Look at September quarter. 67 crore profit. But when is the festive season? December quarter, October, November, December, 158 crores. Wedding season, Jan, Feb, March, 101 crores. Again, when June comes, dips. Again, dips. Again, festivals come, increases. Wedding season comes, increases. So these are seasonal, right? But is the pattern predictable? Yes. It is logical. It is logical and predictable. And then we have commodity stocks. What do I mean by commodity stocks? Wherein the product matters more than the brand itself. For example, right? Would you, if let's say, would you look at the price of petrol? If let's say Geo and BPCL, right? They're selling the same E20 blend petrol, but let's say BPCL is selling it for 100 and Geo is selling it for 105. Again, hypothetical examples. Will you still go to Geo and buy it at 105 because you are a Geo loyalist? No, right? It's petrol, it's E20, it's the same thing. I'll go and buy it in BPCL. If tomorrow HP comes and sells it at 95, I'll go to HP. Correct? So in this things wherein what we are purchasing is not necessarily a brand, but a commodity. Like let's say paper, right? Or let's say steel, or let's say fertilizers, correct? You are not buying a brand, you are buying the commodity. Now, the problem with these commodities is that they are cyclical. You will never be able to predict what is a cycle going to be like. And I'm telling you, the CEOs can't predict of these companies what the cycle is going to be like, right? They have regulations. It is properly global, right? Anything can happen. I was like the, chairperson of Tata Steel. I was going through this interview 3-4 years back, and I remember he said, he was to the interview. He said, I have been doing this for the last 40 years of my life. I won't be able to tell whether the price of steel is going to be more or less tomorrow, right? Same thing. Now, let's look at it with an example. Let's look at Tata Steel itself. Look at this quarterly figure. Is there any correlation? 525 minus 6,500, 522, 555, 919, 759, 295, up, down. The magnitude of it also varies. Directionally, magnitude-wise, it is just all over the place, right? Can I look at it for JK paper? Let's see, paper. Is it similar, right? Up, all of a sudden down, right? Again up, right? What else? What else? What else? IHCL. IHCL तो दूसरा industry हो गया, right? Can I look at it for, let's say, some other paper, right? Where do we go? Oh, okay. Let's look at it for Deepak Nitrite, right? Very, very famous. Yes. Very, very famous. Let's look at it for Deepak Nitrite as well. See, growing, lots of all of a sudden growth, and again then cyclicality hits in. So what have we learned when it comes to commodities? Of course, because they are cyclical, we can't predict. We can't take high probability guesses, right? And should we try to gamble with our hard-earned money? Small caps are as it is risky, right? So the fourth rule that I want to tell all of you is stay away from commodity or cyclical stocks. Don't try and find patterns in randomness. It is random for a reason. Don't try and find patterns or try and look for sense in the numbers. Okay? Got it? Everybody clear? Stay away. As a rule of thumb, especially when you're doing small caps, I would say even for your large caps, it is okay for trading. For investing, it can be sometimes risky. And for small caps, ekdam hi no. The next thing that I want to teach all of you about is something which is very, very simple. Something is very simple. It is the price of a stock. And like, ye kya hai? Price of a stock, so you can just go check the price of a stock. What is the price of Deepak Nitrite? 1662. What does it mean? Well, let me tell you something. For example, it is the monsoons, right? Let's say it's a Sunday and some other Sunday wherein you're not having to spend time with me, but you can spend quality time with your family, your friends. And let's say it's raining outside, the weather is absolutely amazing, and you are craving chai and French fries. Okay? Let's say you make chai, but you don't have potatoes at home, and at the very same time, you see that your local vendor is going just outside your house and selling potatoes. So you get very excited. You go and bhaiya aloo dijiye, and he said, "Sir, 2,000 rupiya kilo." No matter how much you want to have French fries, will you buy that potato? How much it is raining, how much the ambience is good, family is there, you will never buy that potato because price of potato should be 50 rupees. Why? Because we are value conscious, hence we will never buy. Right? Now, unfortunately, we are value conscious when it comes to everything. We will buy things online on discount. We'll wait for the discount because sensible, value conscious people. But when it comes to stocks, we lose that consciousness of value entirely. Now, before I tell you why, let me tell you something. Like, I have a lot of Marwari friends, and I heard this from a Marwari friend of mine. But I forget the term because they said in Marwari language, right? The basic concept is that they have a funda. If you invest in something, right, in a business, they have 1,000 day the return. The business should recover your money in 1,000 days. That is a funda that they live by, right? Correct? I think there's a proper sentence in Marwadi. I don't know. But let's say when they're investing in stocks, they take it a step further. They say that, okay, I'm not running the business myself. I'm just investing in a share. We can, let's say, instead of 1,000 days, we can, let's say, bear it for 10 years or so. Right? In how much time does my investment recover? Correct? Now let's look at a few things. Eternal, right? Can you see something called as PE ratio? It is 674, right? Now let me tell you something. PE ratio is basically the amount, the number of years it takes for 1 rupee of your investment to recover. Does that make sense? It is, you can look at it in two ways. One is the amount of money you are paying for every rupee of profit that the company is earning, right? If let's say one share, the earnings profit per share is 1 rupee, right? How much are you paying for that share? So for example, the stock PE is 674. You are paying 674 rupees per share, wherein the share is creating profits. Now, can you understand? Yes, you are paying 674 rupees per share for 1 rupee of profit on that share. And this is, of course, yearly. That share is creating 1 rupee of net profit per year. And you are paying 674 rupees to purchase that share. So if you keep on making 1 rupee, 1 rupee, 1 rupee, it will take you 674 years to recover the money that you put in to buy that share. Understood? This is exactly what the PE ratio is, right? The price that you are paying for 1 rupee of profit, correct? This is what the PE ratio is. Now, let me try and explain it to you a little better. Okay? Forget about PE ratio. Think about a flat, right? There are 3 flat options. In a suburban flat, pay attention over here, you will understand. Okay? I have tried my best, right? P, I don't know, people confuse P's for some reason. So I'll try a different explanation, right? Let's say there's a flat A. The price of the flat is 50 lakhs and the rent is 2.5 lakhs per year. How many years of rent will it take for you to recover your investment? 20 years? Yes or no? Correct? Can I say that the rent is basically my profit per year that my flat is earning me? Can I say that in very simple terms, right? Profit, can I just say, like a business, like a share, right? If I invest 50 lakhs to buy this flat, think like you're paying 50 lakhs to buy this share. And it is creating 2.5 lakh annual rent, right? That means it is giving, or let's say in profit is 2.5 lakhs per year. It'll take 20 years. If everything else remains the same, very, very important. If everything else remains the same, it will take 20 years for me to recover my investment, right? Flat B, a little posh area, 1 CR, annual rent is 2 lakhs. 50 years to recover my investment, right? Is so the same thing. These are PE for the flat, price to earnings for the flat, right? And tier 2 city, 30 lakh flat, annual rent is 3 lakhs. Some miracle is happening, okay? Some miracle is happening. If everything else remains the same, you recover your money in 10 years. Correct? This is the same rationale for PE. Now take the same logic. You buy a share for 500 rupees. The profit per share of that company is 25 rupees. If everything else remains the same, it will take you 20 years to recover the investment. Correct? Yes. Basically, can I also say, and this is exactly the PE ratio, right? The amount of money I'm paying per unit of profit. 500 divided by 25. So I'm paying basically 20 rupees per 1 rupee of profit. Or I can also say that it'll take me 20 years to recover my money. I'm paying 20 years worth of current profits to own this company today. Everything else staying the same, right? And that is exactly what the PE ratio is. If P is less than 10, the market is not expecting growth. If P is between 10 and 30, the market is expecting moderate growth. If the P is between 30 and 60, the market is expecting high growth. And if the P is more than 60, the market is expecting very high growth. When will you pay more for a particular stock? Why would you pay 20x P versus a 10x P? If the growth potential is high, absolutely correct. Right? For example, if I go back to this slide and let's say this is 50 years, but let's say because it's a posh area and a lot of things are coming up, the rent goes up to let's say 5 lakhs a year in the next 3 years. The price of that flat goes up by 3-4 CR. Correct? Then what is happening? You will still go for this 50x because there is a lot of growth potential, right? Understood? So when we are looking at P, we want to go for a little more moderate P, right? Wherein the market expects growth. Now, there is a problem over here, right? How do I decide? So there are two factors. Now, listen to this. I'll take another example, right? For example, think of two cricket players, right? Think of two cricket players. And let's say player A in the last match scored 10 runs and people paid 100 rupees to see him play. Okay. So basically, it is a 10 rupee per run that people are paying to see him play. Looks very cheap, right? On the same hand, there is a player B who scores 10 rupees a run, but people are having to pay 400 rupees to play, watch him play. Essentially, they're paying 40 rupees per run, but it looks expensive, right? But look at it, why is the price as such? It can very well be that the player is 38 years old, injury prone. His batting average has been declining for 3 seasons. And hence there's a low P and a declining performance, right? So people will of course not pay more. Same, 10 runs only. But let's say this player B is 21-year-old debutant. Let's say this is a Suryavanshi, right? Even though his career average is low at the moment, and he is starting to do well, career trajectory is on the up, people will pay more to see him play because there is a growth potential there. So only saying that low P is good, high P is bad is not sufficient. We have to factor in growth as well. High P is good if there is a lot of growth. Low P is not good if there is no growth. What will you do buying something cheap when there is no growth potential only, right? And hence, we take these two concepts and put them together, PE and growth, right? We divide the PE ratio by growth, and then we come to something called as a price earnings growth ratio. So we factor in P, we factor in growth, we get this ratio. As a rule of thumb, right? This is the standard textbook definition. PE of 0. Anything less than 1 is attractive because you're getting more than 1 rupee of growth for less than 1 rupee of price. But don't confuse yourself too much. In our Indian markets, this is for the Western markets, anything below 3, a PEG of 3 is acceptable if the growth is high. Now, what I want you to focus on is this screen. Always look for low PE and high growth, wherein you are paying less at the moment, but the stock has high potential. High PE, high growth can be risky. Low PE, low growth is a value trap. Nobody cares about it. And if high PE, low growth, matlab you're paying more, but there is no growth potential. That is a disaster. So you want to pay less at the moment, but you want to have high growth potential as well. This is where the multi-bagger opportunity is in. Hence, always try to do this. I know it can be a little tricky, but always check two things. Always invest in low PE, high growth stocks. For example, tell me something, if I look at, let's say, Trent, right? It has been correcting at the moment. Look at PE, very high. But let's look at growth as well. Where is growth? Right? Compounded profit growth over the last 10 years is 43. Over the last 3 years is 71. So very, very high growth as well. Right? So it is okay. All right. So always look at both PE and your growth. Preferably lower PE and preferably very high growth. Right? And you can use the PEG ratio to do that as well. For example, can you see? Let me add just a second.
Como é que se tira?
Okay. Where were we? Trend, right? So can we see the PEG ratio over here? 1.31, it is decent. Now let's look at the PEG ratio for Eternal. 23.9. I would not buy Eternal at the moment. What did I say? In India, a PEG of till 3, maximum 4 is still okay. Otherwise, it is too risky for your money at the moment, especially when coming to small cap stocks. Right? So that was rule number 5. Okay. Repeat with me. Always invest in low PE, high growth stocks. Say it in your mind. Okay. And PEG, always make sure PEG is lower than 3 to 4. Textbook definition is 1.5, but that is for the West because we are a developing country. In India, 3-4 is also possible. Okay. Right? Now, the next thing is that we have all been talking about when to exit for so long, right? When to enter for so long. But when should we exit? That is also important. Selling at the right time is as important as buying at the right time. Is it not? Yes. Hence, let me tell you a few things. First things first, just because price starts falling does not mean that you should sell. Let's say today you buy an iPhone for 1.5 lakhs. Very, very big investment, right? Tomorrow, something happens and the same iPhone is selling at 75,000 rupees. Will you go and sell your iPhone? No, right? Because the value is the same. Remember, value and price are not the same thing. Always remember, value is the same as the phone had yesterday. Only thing is the price has changed, and price can change for whatever reasons. But your goal should always be to see whether there has been a change in value or not. Same phone, same thing, exactly same. Ditto, no change. So why should you sell? Same things we have seen. It is not just me saying. Rakesh Jhunjhunwala ji, he held on to Triton when it crashed 60%. Right? You can go and see his interview and he said, prices are momentarily mispricing the value of the stock. That is absolutely fine. I see no change in the business. I see no change in the value of the company. Prices are moving for some different reason. Prices are prices. They move temporarily here and there. They're like a cat, right? They will leave your house, go here and there. But if you have a pet cat, they'll come back to your house at the end of the day, right? Prices are like that. They will go here and there. At the end of the day, they'll come back to value. So if value does not change, let price be. Correct? Same way, if you go through Vijay Kedia and his interview on Sera, correct? Stock crashed more than 50%, but he still held. And the rest is history, right? So don't just sell because the prices are moving. Try and see if why is the price moving? Is something fundamentally changing? If there has been a fundamental change, that means the value proposition changed. Get out. But if only prices are fluctuating, the company is doing exactly as it is supposed to do, as it has been doing, then don't get perplexed. This is very, very common, especially in small caps. Okay. Now, when you should absolutely sell? See this as well. I told you when not to sell. Don't get FOMO'd into selling, right? But let's say the company has a sudden unexplained profit drop. For example, Vodafone India's profits collapsed due to regulatory war, right? It is a problem. It is a problem which will persist. So whenever there is a sudden unexplained profit drop, exit. Let's say when the promoter gets caught in a scandal, exit. Genson Engineering, correct? Promoter pledge or stake dilution. Promoter is quietly selling their shares or, putting their share as collateral and borrowing money against it. Happened in PC Jeweler. Exit. Don't agree to stake dilution. If the promoter himself is not keeping the share, why should you keep the share of the company that he owns? Something is fishy. Auditor resigns. People who are supposed to provide unbiased opinion on the company, if they say that I will not give an opinion, I will rather resign, that means something is not right. It is often the earliest warning sign. And last but not the least, if your original thesis breaks, if let's say you decided, okay, this will happen, so that will happen, and hence you decided to enter an investment. If that thesis does not hold true anymore, then you get out. Correct? And last but not the least, it is not only that exiting is important when the prices are down or when you are saving yourself, exiting is also important when you are making profits. Let's say your stock has done very well and the PE has crossed 80 to 100 and the growth is slowing down. Get out, book your profits, try and find a new opportunity, right? Or if let's say the stock has gone up by 5 to 10 times, but the profits are not increasing at fast, get out, right? Book your profits. If everybody is talking about the stock, there is a lot of hype, get out. It is going to dilute. If you find a better opportunity elsewhere, of course, you don't have access to unlimited money. You have made more of profit in a stock. You have already made a lot of profit. Get out, enter some new opportunity if you find it is better. And if let's say that particular small cap own to more than 10, 15, 15 to 20% of your entire small cap portfolio, then get out because you run the risk of concentration. Okay? And you can continue to hold your stocks if the profits are stable quarter on quarter, if the peg is still below 1.5, if the company is still getting market share. That means your original thesis, if it continues to exist, keep on holding. And if it is a time to book profits, you have to do that as well. Okay. So that was your rule number 6. When to exit, when not to exit, when to definitely exit, when to book profits, and when to continue holding. Very, very simple. Keep things simple. If your original thesis is sound and holds, keep on holding it. Okay? I hope all of you understand the, whatever I said on value and price. If the value is intact, keep on holding. Price will come back. But if the value proposition changes, then you also need to take action. And last or the seventh rule I want to teach you is diversification. I want to tell you something. You will never be 100% correct. I will never be 100% correct. And the thing is, neither you nor I, we need to be 100% correct. We need to use the law of averages in our favor. What do I mean by that? That we need to be right more often than we are wrong. If we are able to do that, that is wonderful, good enough. Okay? Hence, we need to diversify. Now, when it comes to small caps, a few things that all of you have learned diversification, right? What is the exact concept of diversification? Having more quantity. That's what you in day one, right? Now, when it comes to small caps, two diversification rules that I want to share with all of you. First and foremost, no matter how much risk capital you have, your small should not be more than 15 to 20% of your total portfolio. Let's say if you have a 1 lakh rupee portfolio, your small cap portfolio should not be more than 15 to 25,000. You have, don't take a small cap portion of this. Now, let's say you go for 25%. Okay? You have to put your 25%, you want to put in small caps, so 25,000. That 25,000 should be spread across 12 to 15 stocks. Anything below 10 stocks means something like a Genstock can destroy you. Anything more than 20 means you'll have a tough time tracking all of these. No You don't want concentration risk, right? Always like you diversify not only numbers but also sectors, right? Let's say I give you that example, right? One from EMS, one from wastewater treatment, one from, let's say, green energy, one from pharma. So you need to diversify. Okay. So let's say pharma today starts doing bad, the other industries are doing good. Your portfolio will survive. And that is exactly what I'm going to teach you. This is a small sample of 5 stocks. Let's say somebody to invest, right? 20 lakhs is equally invested across 5 small cap stocks, right? One will go to zero. Very, very likely that can happen, right? One goes to zero. One stock will, get negative. Stock will give, let's say, double in 5 years, which is like something which the Nifty gives. Why will you do that? One stock, let's say, goes 5x in 5 years. Great. Another stock gives 6x in 5 years. Now the thing is, 3 stocks, one stock has done nothing, one stock has lost value, one stock has barely done anything. Only 2 stocks have decent performed. But when you look at your overall portfolio, your portfolio has become it will still be like this. You will still go wrong. But when you diversify across industries and numbers, even if you may, 1 or 2 or 3 go wrong, the rest of your portfolio, or even 1 or 2, if they're multi-baggers, they'll take care of your entire portfolio. Right? So don't bet on one, bet on even if one other actually succeeds, take care of your entire small cap portfolio. Is this illustration understandable? Yes, small caps you have to hold. You have to hold for at least 3-4 years. Usually people don't know them, they don't talk about them too much, right? They're undiscovered. So it's a very good quality stocks. It's a matter of time that people discover this doing good and people catch attention. When that happens, that is wherein the multi-bagger moves happen. So you need to be patient to solve this. And you need to have risk appetite as well. Now, so that was rule number 7, right? This is bad, right? Something like a Gensol, entire stock. This is also bad. This is okay. This is good. This is good. But what at the end of the day, your entire small portfolio, despite 3 being not so good out of 5, you still end up making 20%. Of course, this is hypothetical, but this is in reality what we expect small caps to perform like. Now, those were 7 rules. So again, I'll quickly summarize. We learned that the checklist was to choose the right sectors, only invest in profit trends, stay away from loss-making companies, invest in evergreen and seasonal stocks, not cyclical, buy low PE, high growth stocks, exit if there is a sudden drop in profits, and keep your portfolio diversified. 7 that you can create when you start your well, I will. Okay. Yes. First, let me share a screener with you. SpringPad small screen, right? This is how the screen looks like. Again, like I'm Alpha Plus screener, I've created my area for small caps, and it goes to the entire universe and picks out small stocks for me. Right now, with the help, and I'll be end of today. With the help of this screener, can you do the 7 no, list? These stocks do your yes. Or you need help with that also. How many stocks are there? 50. You're saying you can't check your sense. Actually, stocks is making you lazy. Lazy doesn't mean bad. Lazy. Let me tell you how is smart analysis. I we show small cap opportunity fine if they're okay we fix small cap. How we fundamental analysis, how do we do so we have a spring small cap opportunity finder. Your job is to copy the entire prompt. Okay. The prompt will help you identify the best two from the entire list. Does that sound like something that's great, which can be a real problem solver? We'll go clear, see what are the stocks, then use fundamental analysis and the 7 checklists that I have taught you, and then rank and give you the best two. Right? So all you do is copy one list. The screener link is already shown. This link is already mentioned in the prompt. So it will automatically fetch details from the you have to open the screener also. So and it will create a report like for you. In this report, right, it gives all the screener links, right, all the screener stocks, and it is dashboard for you. Rank and what are the two stocks? It identifies front and price as the two good options. Frontier Spring, crisis. Why these two? Right? It tells you exactly what are the screener stocks. Frontier Springs, it's the highest, right? 94 out of 110. And then where it score, how much? So it has growth, profitability, financial health, more with what is value and a few bonus points. Right? For calculates everything, does an analysis, shares the analysis, both the analysis you want, niche position, celebrity, financial quality, management, evaluation, catalyst. These filters, it's the for and hence it becomes rank number 2 is Isaac against analysis. It goes through all the stocks, the rankings, scoring, and rankings. Does head analysis for these rank 1, 2. Does portfolio snapshot? How much do you get them? This, of course, this is not this is such the split. You can just split on your own. Why are the other companies eliminated? What were problems? What are the red flags? Quality, commodity cycle, commodity pass through. Remember, security not going to happen. Tariff conversion, low eliminations, lower, hence kick. And of course, it tells you the S methodology as got it. We have small cap portfolio every quarter. You can just like or not, MD in the chat. Like earlier, we used to rely on screener, then we would really do it. Now you don't have to open screener. You can go to the screener, pull the do the analysis based on your framework and return the value. Right? Hence, so that was me caps, the screener, how to use AI in small caps as well. So now do you understand how stock option role in long-term wealth building? How incorrect stock choices we have right in time. Structural constraints limit large institutions and small caps, right? There are two things that you need to know about investing. First is allow compounding, allow compounding to do the lifting, and of course, manage risk. Every single checklist that I taught you today. What is the first most important thing? Keep it simple. Don't assess risk because it is your hard-earned money. Small caps are already risk. So, protect your capital. Take only high probability opportunities. Nobody is going to give you extra marks for good head. Nobody is going to give you extra marks for taking necessary risk. I hope you understand that, right? And understand why people like capital. How many people something new today, something you were doing wrong, at least one thing which you were doing wrong. Somebody said everything. Well, if you're a new learner, then everything. But good to see all of it. You learn something. That's why people start losing their capital. People lose money because they come in with half knowledge. Please stop relying on Telegram, Twitter, YouTube, and please, having a mentor. If you like what please try to learn from people who know the thing. Even either Warren Buffett had a mentor, and he knows what's his name. Warren Buffett mentor, Benjamin Graham, absolutely. Charlie Munger was his mentor. One mentor was Benjamin Graham, right? Even Rajesh Jhunjhunwala very much absolutely correct. Radhakrishnan, the man, the founder of Not. So, again, having said that, I just want to tell you a few things. Please have you think about. I want to give this, visual cue to you. Historically, a small number of standards have contributed disproportionately to long-term portfolio outcomes. What do I mean by that? Look at any successful people, right? You will see that there have small companies who have been kept for a long time, and they are the ones which at the end of the day make of if you or you've been in markets for a long time, you'll know this, that there are a handful of stocks which drive your entire portfolio. Now, this is especially true for small cap stocks, right? Now, I'll tell you, what did I say? Invest in small caps. It is risky. Because it is risky, make it private invest. For example, if somebody is doing a 20,000 right? 3,000 is 3% portfolio, 2,000 in small caps, right? You can choose to take risk. If let's say you are being absolutely other part of your portfolio, other 80%. This 3,000, remember we saw the average 3%. We saw the example, right? Even if it's wrong, right? Even if it's wrong, still end up around 83%. That's damn where something wrong, right? Let's take that example. And if you're able to achieve this 1,000 rupees per month and do this in the next 30 years, let's say you're 25-year-old, you're doing this for your family. You will, across 30 years, only invest 10.8 lakh rupees. But the total amount, right, this 3,000 per month, which is seemingly nothing, will build up to 8.71 crores. Right? And remember, this is best. It is 2-3 crores. Some 3,000. Now, this person this was here. Analysis. Again, if this 15 to 20%, not more than that, you should do once, right? Reduce 8.7 a lot. Even if inflation, right, 2-3 crores as of today, they say that invest 3,000 rupees, I'll give you 2.32 crores today, right? Will you get? Of course. So think about it. If the real value is 2.32 crores is monthly investment, it is very good, right? Now, having seen that, do you feel like you have valuable time? Valuable time in responsible financial decision, having a strategic framework? Well, right? The only thing that you can do is start today. As I said, day one as well, we always feel that we are late. Yes, the best to get started with but what you need to do is you need to educate yourself and write financial decisions. Make it an obsession, right? To be financially disciplined and that's the most important thing. And in chat, if you would be financially disciplined and from today on. Absolutely. How do we ensure financial discipline? Is a way to go about financial. The right balance, I would say, is to pursue active market opportunities via trading. If done right, can be a very source to generate an active recurring source of additional income. Is not only important. To that comes grow that wealth, take that and work to long-term wealth. What do you need to boost overall to protect and grow your capital sustainably over time? Well, you investing when decisions are evaluated using work. I taught you a very small part of a framework, right? The investing life cycle frameworks that cap businesses, not large caps, look at micro from fundamental and risk point of view. Start doing macro analysis. Right? To drive long-term outcomes. Look price trends, market behavior to support investment decisions. Right? Analysis as well. Learn how multiple accesses, income streams, rebalancing will help create for you. How personal leverage, planning, and asset protection. Say something. Do you think these principles support disciplined long-term wealth building? Whatever. Yes. But you know, bring remind me of a quote that JKD said. I just half a minute to read that. I said this in the forum. Me. I wish I was one opportunity. One idea can change your world. Right? Building. I have a question to all of you. Would you like to learn about both value, income, small cap investing, goal-based investing, technical in investing, macro institutional investing, tax mastery, or currently drop or Rajesh, Sagar, thank you so much for that. And this that's something I thought you have thought well these days. And if you drop in a want to learn more this, like you time which you talk and build to a is if like and I, I take over and hand all the resources and the food. And so, this is a program that is here the perfected this, everything. No. It was investing absolutely for 6 weeks. And it was a class for weeks. All so investing, we everything from scratch, like from financial analysis, macro industry research, make you do one fundamental strategies, right? This is something that we learn with AI non-technical ones like investors. So level 1, learn 6 right from scratch and it cloud AI prompt or agent. We are able to start from the application phase. We learn the different growth investing for each and every style of investing. we share multiple strategies, we teach multiple scenarios and multiple AI frameworks. So that no matter where you are, right? If your risk appetite is high, low, the markets are in a bull market, bear market, you have tools for each every market. And last